Back in 2019, I bet big on Tesla. Everyone thought the company was overvalued. It was just a car maker at that point, and it was headed for bankruptcy. I saw in that company a once in a generation disruptor opportunity, and that bet went on to 20x. Well, I'm getting that exact same feeling today looking at HIMS stock. Today, HIMS and hers is being dismissed, doubted, and massively shorted. But what the Bears are missing is not just a $5 trillion opportunity in healthcare, they are missing a structural liquidity trap. This company currently has a squeeze score of 100, and shorts are literally unable to exit. HIMS isn't just a long term play for me anymore. It's a powder keg ready to explode. In this video, I'll show you the exact data, the catalysts that they will be hitting possibly as soon as February, and why the stock could reprice to $50+ in a matter of days. You don't want to miss this. So I'm going to give you guys a quick TLDR in case you don't want to watch the whole video. So essentially, HIMS is a coiled spring, I think, here. If we pull up the chart, this stock is coiling up like a spring. And it is currently one of the most crowded short trades in the market with a squeeze score of 100. The data, the short interest is hovering near 31% of the float, which is utterly massive. A third of the shares are being shorted. The days to cover has spiked to an extreme of 7.42 days. That's the high end of the estimates, creating a massive structural liquidity trap for the bears. And mind you, why is this a trap? We'll just pull this up real quick here. Look at this. Look at this. Look at this revenue. People are shorting this. They're shorting this. What? Look at the revenue. It's just up into the right business here, but that's neither here nor there. So the catalyst, shorts are betting on a lot of it. I think has to do with the Safe Drugs Act, HR 6509, that they think maybe will kill the GLP-1 business. HIMS is making a lot from their compounded segment there, and they're thinking that maybe this compounding loophole is going to go away and they're not going to be able to do it anymore. But they're ignoring the core 49% year over year growth in hair, skin, and mental health. So any all clear in February's earnings could trigger a vertical repricing to the $50+ range. The bottom line, we look at the chart here. I'm buying the stock at Liberation Day levels, right? The price is almost as low as it was in Liberation Day, but the RSI is already there. The RSI is at the same level as it was back in Liberation Day during all that chaos, call it from March to May. The short-term volatility is definitely going to be guaranteed here, but the long-term infrastructure this company is building remains a generational disruptor. All right, you guys are welcome for that TLDR. Before we get into the meat and potatoes of the video here, I just got to say, I'm so mad right now. I filmed this video 4 hours ago. I'm using Zoom and it got all messed up. It like didn't record right. It messed up the picture. So I rage quit for a little bit, got on the treadmill 40 minutes. We're back now. I got a second wind. I was just like, I wasn't even going to do this tonight. Here I am, Vinny Joe show after hours, after dark. You're going to get the unhinged mode here. But we did a little goose frog. It's all gonna be okay. That's from what was that movie? Anger Management with Jack Nicholson. Hilarious movie. Here's the deal. I'm gonna give you the best advice, better than anything having to do with investing here. Best advice I will give you tonight. If you're ever gonna watch a new Netflix movie, don't. It's very simple. Do not. Instead, just watch any old classic movie. You'll be infinitely better off and happier, and you'll actually be entertained back when they actually made good movies. Anger Management, hilarious movie. Anywho, let's get deep into this. So, HIMS and Hers is a textbook short squeeze candidate right now. And by the way, guys, because the last video was like 20 minutes. Last side note, I'm sorry. It was like 20 minutes. I'm not doing that again. So you're welcome. You can get a short version of this. If you guys want like the full breakdown, I'll link to my article I wrote down below, free on Substack. Okay. Textbook short squeeze candidate we have in the making here. This stock is looking like a coiled spring. Like I mentioned, the bearish bets have reached extreme levels. Any significant positive news at this point could force the short sellers to start panic buying their shares, to exit their positions, which would cause a massive price spike. But to me, this is simply just the cherry on top. I'm not short-term trading this one. I'm literally just using it as an opportunity to build up my position even more the more it dips. I'm in it for the long term. I don't care about the short term fluctuations. But to be clear, this is definitely going to be volatile. This is not a stock for the faint of heart here. So really quick, just to kind of give you guys quick breakdown, kind of the short squeeze scorecard here. The short interest as a percent of the float is, like I said, it depends on the source you're using, but 31% to 35%, that is extreme. That's like 1/3 of the shares are sold short. Anything over 20% is considered very high. So that's part one. Part two, the days to cover. Again, this fluctuates as well. I saw anywhere from 4.21 days to maybe a high of about 7.4. That's very high. If short sellers want to exit, it takes them a full week basically to get out. That's going to create a stampede effect if things get dicey here. Now, the one thing we're missing, so we've got two of the three, but if we could get this third thing, you really have the short squeeze. The cost to borrow is only around 0.4%, so that's very low. That's the missing piece right now because it's very cheap for bears to hold on to their short positions. It's basically like they're paying very low rent, but if things start to turn, that cost to borrow is quickly going to shoot up. You get some positive news and positive momentum, all of a sudden that cost of borrow could be 20%. And that's when things really start to get interesting. So yeah, if this could get up to like 20%, we'll touch more on that in a second here. So is this a squeeze? The verdict, yes, but the fuse hasn't been lit yet. Let's talk a little bit about why the stock has been in this downtrend you see here. If I go back to the chart, it's kind of been in a downtrend. I can't break out. It's at the same level like 4 or 5 times now, maybe 6 times. And it's kind of just been, you know, topped out and then kind of like lower highs, you could argue here, lower lows. It seems like it's kind of in a downtrend. To be honest, the chart is ugly. I mean, it's below the 8 and 21 EMA. But it is coiling here. So short sellers are piling in because they believe the FDA will crack down on compounded GLP-1s, these weight loss drugs, which would hurt HIMS revenue. They're betting the stock maybe it gets back down to $20. So while this is a possibility, it's really irrelevant, I think, to the long-term trajectory of this company. The GLP-1s are simply a short-term boost. The company actually generates the majority of its profit from its core products. So hair, skin, mental health. Think of the current weight loss offering not as the future, but as a bridge. So even if the compounding loophole gets closed and they take a short-term hit, the foundation of the business remains very well intact. It's the best it's ever been. Not to mention these acquisitions that we've been talking about the last couple of videos, where I kind of laid out the long-term fundamental thesis. Now, what's interesting too, so about closing this compounding loophole, I was thinking about this today. We're heading into a midterm election year where rising costs are a top issue for voters. It would be political suicide to attack companies that are finally making healthcare affordable. So I think they have that going for them as well. I mentioned the mechanics for the squeeze here, the structural liquidity trap with the days to cover ranging from a little over 4 to 7.4 days to cover. Short sellers are essentially standing in a theater with one tiny exit and a week-long line to get out. They the HIMS carries a squeeze score of 100, making it one of the most crowded and dangerous short positions in the current market. So again, February, if that brings a regulatory green light or we get a Q4 earnings beat to the upside, maybe some surprise in there, the ensuing forced cover wouldn't just be a rally. It would be possible to see a vertical repricing here from the 30s all the way back up to the 50s, maybe, as shorts are going to have to outbid each other for a dwindling supply of shares. So what could trigger the squeeze? I'll be watching for earnings. If they beat, despite, another bear case is there's some spending fears going on with the company that these investments they've made maybe aren't going to have a high ROI, which I think is blasphemous. I think that they've made some brilliant acquisitions, and this is really a powerhouse in the making. Again, you can check out my last couple of videos, more on that. Maybe we get a regulatory all clear. Any news that this Safe Drugs Act, which is restricting the compounding, gets stalled or is dead in Congress. And then there's always the chance, institutional buyers start to step in, which there's definitely been some of that. I believe in Q3, JP Morgan bought like 15 million shares, but just think any major fund, Vanguard, BlackRock, or any popular investor, if they report a new massive stake, it reduces the available shares even further. Think, Warren Buffett taking that stake in United Healthcare around 310, the stock like quickly shot up to 360, 370, and then it came back later. But any institutional buying, it could be that spark as well to get this stock rallying. So if you own the stock like myself, just expect massive volatility. It's going to have violent swings, 5 to 10% moves on no news as short sellers and long buyers are fighting for control. Now, if the volume dries up, which often happens before a squeeze, the real days to cover will shoot up toward that 7 level. And anything over 5 is really considered like a red zone for shorts where things can get ugly quick. Really, we're going to need that cost to borrow to go up, which, as I said, any catalyst could quickly cause that in a matter of days, right? You think back to like the GameStop AMC saga, you see these borrowing fees spike to 20% plus very quickly, and then that forces quick covering and, acts as the stock just melts to the upside. So in conclusion, shorts are comfortable right now. It's cheap enough for them to wait. They're not paying a high interest rate, but that changes the second a catalyst hits, right? And that low interest rate right now to borrow the shares actually creates complacency because there is no urgency for them to be careful here. So any positive news is going to turn this from a quiet room to a crowded exit very quickly and ignite that third engine really here to cause a squeeze. If we get the high borrowing costs, we could be off to the races. I alluded earlier to the chart here. It does look weak. I'll be honest. We'll do some technicals, some voodoo magic. It's weak. It's below the 821 EMA. But it is kind of basing here, it seems. And again, I drew these red lines. You can kind of see like it's obviously going another $5 or $10 to the Liberation Day lows, but that's kind of like a worst case. You think of the panic we saw then. I mean, it would take something really, really bad for that to happen again, which it could happen. But when I think about the long-term trajectory of this company, I'm happy buying it here. Anything lower, I just think would be a steal. But again, what did it for me, like this RSI is already basically where it was back then, if not even lower. I think that's pretty wild. That's how poor sentiment has turned. So I think it's already trading at bargain levels. RSI as low as it was in April. Like I said in the beginning, though, I'm not trading this. I'm just using it as an opportunity to buy cheap shares in a company that my long-term conviction is building in by the day. So let me know your thoughts on HIMS down in the comments below. Look forward to those. And if you enjoyed the video, don't forget to subscribe for more content where I cut through the noise with deep dive analysis, give you high conviction ideas, and a no BS view on the market. I break down the companies and investments I'm making, sharing 10 plus years of hard-won investing experience to help you find the next multi-bagger. I'll see you guys next time.